Hello, Business 600A students. This is Professor Hassey, and this is our Week 6 lecture video and introducing Week 6, which is called Managerial Accounting, as we begin the changeover from accounting to financial management or finance. And managerial accounting is management of accounting information to help make financial decisions, financial strategies. And that's what we're talking about in Chapter 14. Also this week, we have a case paper review session this Saturday from 1 to 2 p.m. Again, it's a voluntary session. You can just, if you can't make it on Saturday, which is understandable, a lot of us have a lot of things going on the weekends, I'll be recording it and posting it to Blackboard later on Saturday afternoon. It'll be a good review session for our case paper, which was posted last week in the subject of financial statement and interpretation and ratio analysis of the firm you selected at the beginning of our course. And that case paper review will be this Saturday afternoon. You also have an assignment this week. Assignment due, assignment number 4, which will be to review the financial statements of Apple Computer for the years 2019, 18, and 17. And we'll go over that in a minute. We've already introduced that, but also just talk a little bit more about that in regards to Chapter 13, our discussion last week. So now let's just take a look and make sure we all have an idea of where we stand in our class as we head into the last 4 weeks of our spring session. Here's our Blackboard site, which I'm sure you're getting very used to by now. If you go to the course syllabus and schedule and information, you'll see one additional thing for this week. It's about MBA career services, of which many of you are getting an MBA degree. That's why you're taking this class. This is some information about using our career services department. Now, I know many of you work, but also it's always good to update and get understanding about your syllabus, about your resume, the market of jobs going on right now. I think it's a good idea every now and then to check in with our career services for the MBA program. And here is an email address for Mr. Paul Boychuk, who's in charge of this, where they use the Handshake account, which Handshake is a way of looking at what the network is out there for jobs in your particular expertise. So please feel free to take a look at this and call on Mr. Boychuk. Tell him that you're taking my class with Mr. Hassey, and he will explain to you what their services are and how they can help you. It's always good to always plan and see where your status is in the marketplace for jobs these days. So please take advantage of that. This is MBA Career Services in our course information file folder. Again, as we hit into week 6, you have 2 papers due now. You have this coming week, Sunday, assignment number 4, which we'll talk about in a minute. And you have the case assessment paper, which is due March 19th going forward. After that, our last grade in the class will be the final examination, the last week of class. And here's where we are in week 6. We're talking about managerial accounting. Next week, we're talking about cost volume profit analysis, which is basically called break-even analysis or strategic planning. And then in the last week of class, we talk about budgeting, financial planning, capital budgeting, investment analysis as we complete the study of our accounting and finance class. Again, here is the areas of assignments where you have assignment 4 this week. You have the project paper due in another couple weeks. And here's our work in week 6 of our file folder. An outline of refreshing ourselves with analysis of financial statements, which you're doing in the assignment this week. And also the introduction to managerial accounting, which I'm going to talk a little about in just a few minutes. So that's where we stand as we begin this week 6 in our class. Remember, we have student hours every Thursday night. In case you'd have some questions or concerned about any of the assignments you're working on now, please feel free to zoom in to that session Thursday nights at 6 to 8. Anything I can do to help you, please call on me. And as again, a reminder, our review session, which is in the Zoom and YouTube links file folder, there's the link. It's the same link that have been having in this class all session, but it's available this Saturday to zoom in and get a little review and help you with your case paper. Here is your assignment this week, assignment number 4, where I'm asking you specific questions about some financial statements that I provided for Apple Computer. It's basically beginning to review accounting information and what it tells us about a company. You're going to identify cash provided by operating activities and cash paid for dividends for 3 years for Apple. You're going to find out, do they spend or how much repurchase of stock there has been? What are they investing in activities on the statement of cash flows? And you're taking a look at net sales and operating income for some specific years and how it's trended and how it's changed over that time. In other words, trend percents are what has the net income done as an increase from 2017, 18, and 19. I'm looking for some percentages of operating sales, net sales, and operating income, how it has changed each of those 3 years. For example, our net sales went up 5% in 2018 from 2017. Our net sales went up 6% in 2019, up from 2018. That's what I'm looking at, a trend as how it has changed over those years. And then I'm going to ask you for 2 years to compute current ratio, return on total assets, debt ratio, and profit margin. All this information is in chapter 13, and this is also information and knowledge that you'll need for your case paper, which we'll talk about on Saturday. And here are the financial statements that I provided you. I wanted to keep the data a little bit old because of the newer financial statements for Apple are a little bit different. And also, they're constantly making changes due to audits and that sort of thing. So I gave you these 3 years for the balance sheet, 2019 and 18. For the income statement or statement of operations, there's their total net sales and so on. For 2019, 18, and 17, and their cash flow statement for those 3 years. Operating activities, investing activities, financial activities, and we talked about those last week. So you're going to take real world analysis of Apple Computer and find that information for assignment 4. And then based on somewhat of doing this, you're going to interpret that information into your case paper of doing a written analysis and interpretation for your company that you selected for this course.
This chapter provides an overview of managerial accounting. In this course, you will learn how managers use accounting information to make decisions and to evaluate performance. You will learn how to determine the cost of a product or service, and related to this, you will gain an appreciation of how important the allocation of overhead costs is to accurate costing. You will learn what is meant by the so-called break-even point and how to determine the break-even point. You will also gain an understanding of how sales mix influences your break-even point. You will understand why the nature of costs, fixed versus variable, impacts profitability, and you will learn how to prepare a basic budget for planning purposes. You will also learn how to use a budget to evaluate performance and how to use variance analysis with standard costs to determine the cause of your problems. You will learn how to use incremental analysis to make decisions and how to evaluate capital investments. Every one of these topics is of vital importance to managing an organization. This chapter provides you with some of the basic terminology and concepts that you need in order to get started.
We're going to spend a little bit of time on this week, but I want to mainly give you the details of Chapter 13 and start working on the paper. And we'll talk more specifically and have some a take-home assignment next week in this regard. But managerial accounting, as I said earlier, is used by management for strategic and evaluation. How are we doing with our costs? Why aren't we making as much money? Well, it's costing us more to provide our product than our competitors. Thus, we're not making as much money and we have to price our product higher. We're pricing ourselves out of the market. You guys probably know this from some of your own business decisions. If costs get too high, it means we got to recoup those costs at higher prices. And then we price ourselves out of the market. Can't do that. We have to have control. We have to have evaluation. And that's what managerial accounting is. What the numbers tell us what's our overhead costs? What's our cost of materials? What's our cost of labor? And as many of you know, what's the greatest cost in any business? It's labor. For some businesses, as much as 70% of their costs are labor. Managerial accounting says, wait a minute, we can't do that. Either we have to lay off people or we have to find a way to find good people and keep them with a better fringe benefit schedule or whatever. Or we can be a bunch of cheap son of a guns and pay them only $10 an hour. But then we can't keep them. And in today's market, if a lot of you have been paying attention to the news, people aren't going back to work at $10 an hour. They'd rather stay on unemployment. So all these things figure into managerial accounting: control, planning, strategy, evaluation. And we're taking the numbers that the financial accounts provided us and doing this. And that's what we're going to be studying the next couple of weeks. It's to provide internal users with control, the information behind the numbers, budgeting, specific areas of efficiencies or inefficiencies within the organization. Financial accounting is just putting the numbers together, showing the financial statements to our users, concentrating on our investors. But managerial accounting is more internal. What do the numbers tell us about our operations of our business? Also, it tells us what the control aspects is: are we running our business ethically? Are we running our business within the laws of the state, of the federal government? Are we ethically? One of the big things now over the last few years in businesses is women's rights, minority workers' rights, employee rights, customer rights, vendor rights. And companies who screw around with this are losing business, ruining their reputation. It's taken Walmart billions of dollars of marketing and spin and internal controls to get back the trust of their workers, that they're giving them a fair shake, and their customers. And there's every company you can see that as an example. Managerial accounting leads to great careers. You have to know managerial accounting if you're going to be a manager. Can you read and understand and put together a budget? Can you read and understand what your cost structure is? What's your price? What are your price points? What do I mean by that? What sales price do we need to achieve in order to make money? If we don't hit that sales point or that sales price, we're not making any money. Why are we in business? The key thing to managerial accounting, and we'll be concentrating on this especially next week, is we have to learn to classify our costs. Direct costs, indirect costs. A direct cost is a cost that actually provides the product or service. An indirect cost, or sometimes called overhead, are costs that you still have that are associated with your product but are not directly associated with the creation of the product. For example, and let's use University of Laverne as an example. A direct cost for University of Laverne is me, Professor Hasse. I provide the teaching. I'm a direct cost. An indirect cost would be your academic advisor. It's not direct. Your academic advising is not teaching you and providing you your courses. But without your academic advisor, you're you got to be pointed in the right direction. That's an indirect cost. An example of a direct cost is putting on the blackboard and all the internet and IT information for you, especially in these remote learning days. That's a direct cost. Without that, you can't take the course. An indirect cost would be somebody keeping track of your billing and your financial aid. That's an indirect cost. Without that, the university can't bill you or can't find you the proper overhead, or excuse me, financial aid that you need to get an education. That's an indirect cost. So it's like this for every business. To know which are direct costs and what are indirect costs are very important. And here's how they're important. This class has 9 students in it. All right. If this class had 6 students in it, we would not be having this class. We would not be having this class. It'd be canceled. You'd have to wait for another term to have it. Why? Because at 6 students, the cost of providing you the class and the revenues we're charging you for the fees make the class negative in income. The expenses are higher than the revenue at 6 students. But if we have more than 6 students, 7, 8, 9, 10, and on, we're going to have the class because the university is recouping their costs. So it's profitable. Not much profit, but it's profitable. So it initiates sound management. Every company has this. What's the break even point? Or when do we have to, how many units do we have to sell to make a profit? You see this all the time. If any of you are in the hotel industry, oh, if we don't have 50% occupancy every night in our hotel, we're losing money. If any of you are in the food service industry, if we don't serve 75 meals a night, we're losing money. If we're in the automobile industry, if we're not producing and selling 15,000 cars a month, we're losing money. This is managerial accounting. It tells us the information whether we're doing our business efficiently and operating correctly. And part of this is understanding what our cost structure is, direct or indirect. Direct materials. What does it cost us in plastic, in electronics, and steel to produce our product? Labor. How much it costs for the labor who's constructing our products? And factory overhead. This is indirect costs. Those people who don't actually put together the product, but the factory can't succeed without maintenance workers, without utility costs. And a lot of you probably know from your own business background, one of the first things somebody tells you, hey, dudes, we're losing money. We got to cut our overhead. We're moving our plant to Mexico. That's cutting overhead. We're moving our plant out of California to Texas. We're cutting our overhead. We're moving our plant to Nevada because we're cutting our overhead. That's typical. That's what managerial accounting tells us. It's broken down into these 3 areas. Manufacturing costs are either materials, labor, or overhead. Prime costs is those are directly associated with the product. Conversion cost is overhead is a bunch of costs all looped into one to be overhead. In in labor, it's just labor, what we pay our people. In material, it's what we paid for the materials that go into the product. But in overhead, it's a bunch of costs: utilities, insurance, depreciation, rent, back office people, HR, IT. These are all part of overhead, and they have to be converted to a particular price level on a per unit basis. We'll learn about this. We're not going to get into too many details of this because that's not this class is not an accounting managerial accounting class. We have classes at Laverne that concentrate just solely on this one diagram for 10 weeks. How exciting. Okay. See what I see here? Manufacturing costs, material, labors, overhead is what is called product cost. So then we have another area of cost called period costs. Those are advertising and selling expenses, G&A, general administrative expenses, support. What area in your business right now are you a product cost or are you a period cost? Are you in HR, IT, marketing, sales? Then you're a period cost. If you're in labor on the assembly line, if you're a purchasing agent, if you're a factory supervisor, if you're an accountant that keeps track of all the expenses of the factory, you're a product cost. Knowing what our product and period costs are very important to an organization. Companies that keep their product costs strong, because why? You have to produce a product that's efficient and people are willing to buy. That coupled with period costs that are within marketing or management reasonable, you're going to make money. Who are the first people to get laid off in an organization? The salespeople, the back office people, IT, accounting, HR. Why? Because those costs you're not earning any revenue off of. You're earning revenue off the product, so you're going to cut those people less than you are the period cost. Now, for certain industries, it's a little bit different, but for most industries, that's the way it is. As a manager of a company, the first thing you're going to do if you're hired to come in and say, all right, we're losing money. Show me your period costs. Show me your selling expenses. Show me your G&A. All right, you're out. You're out. That's gone. That's gone. We're closing down this office. Done. Now I'm going to worry about product costs because I don't want to cut into those because I want to keep the quality of our product good for our customers. Important. This is taken right out of the textbook, a great example of what a product cost is and what a period cost is. Notice period costs: advertising, salespeople, accounting costs, office employees, rent for the office, back office costs. Where product costs are the materials, the labor, the factory overhead, factory insurance, factory depreciation. Those are all product costs because they're associated with your product. When all of you become vice presidents and CEOs of your organizations and you're in charge for this mess, you're going to have to keep track of, have managers that give you managerial accounting information. All right, what does it cost us to produce our product versus what is our period or administrative costs? We got to manage those. We got to put those on budgets. That's what this work is all about. Product costs, period costs, direct costs, indirect costs, material costs, labor costs, overhead costs. It's enough to make your head spin. But this is the details of efficient run organizations. A couple of years ago, I went to visit a friend of mine who worked in a manufacturing company, and he gave me a tour of the manufacturing company. And I know why I was there. He was thinking about me being an investor. So I asked this fella, oh, could you tell me what your product costs per unit are? I have no idea. Excuse me? You don't know what it costs you to produce one unit? How do you set the selling price? Well, the selling price is just whatever we can get for it. Well, how do you know whether you're making money or not? I don't know. All right, I'm out of here. Yeah, I'm going to invest my money with you guys. They don't even know what it costs them to produce the product. And another example. Okay, we're not making much money. Matter of fact, we're losing money. But we produce a good product. Why are we losing money? What do you pay all those so-called selling people and advertising people? What do you pay those people? How much can you be a little bit more efficient in your accounting or HR department or your IT department? Are there areas there that we can consolidate? One of the first things when companies merge or acquire other companies is who do they fire first? The selling and G&A expense people, because they can be incorporated by the company that's taking them over. You can do that same work yourselves. Why do you have these additional people? That's why mergers and acquisitions are very profitable, because these are the first people you lose those expenses right off the bat. It's good to understand what those are. This is what we'll be looking at next week in some sample problems. What are our costs? How do we figure out our costs?
Accounting, things like income statements and balance sheets. But managerial accounting is different because it's basically for managers. Okay, so when we talk about managers, what we're talking about is that we're going to create some information, some info within the firm, and then we're going to give that info to managers to help them. So you might be thinking, okay, well, what kind of information do managers need? Why do they need this information? What are we doing here? So let's just think about an example here. So let's say this example that you start a business that you're going to manufacture furniture. So you start your own business, you're going to manufacture furniture, and it becomes a pretty large furniture making organization. You have a lot of different divisions, and you're trying to run this company. And now we're going to figure out, how does managerial accounting, how is that useful to you in your organization? So the first way we can think about managerial accounting being useful, we can think about it in terms of helping with planning. Now, you might think, okay, well, I can plan for my organization without managerial accounting. Well, what does this have to do with it? Well, a big part of managerial accounting is coming up with budgets. Okay, so we're going to have a marketing budget. We'll have budgets for all the different divisions based on what we expect that they're going to end up spending. We can budget out all different types of costs, what we think this is going to cost, what we think that is going to cost. Ultimately, we're coming up with a plan. That's what a budget is. We're just saying, okay, this is a plan for what these costs are anticipated or expected to be. And more specifically, we can start thinking about things like, okay, we produce if we produce X number of units, X number of units, what is that going to cost? How much marketing? How many marketing dollars should we throw at that? What is going to be the cost in terms of, we think about like overhead, raw materials. What are all the costs? We're going to do some planning, and just kind of look into the future and say if we can plan out our costs and put together these budgets and so forth. But managerial accounting isn't just helpful with planning. It also helps when we think about decision making. Okay, so now we say, okay, well, we looked at the cost to produce a number of units, but should we go ahead and sell those same units to a customer who maybe offers a certain amount? Let's say somebody says, we'll give you $1,000 per couch. You manufacture furniture, so you got couches, $1,000 per couch. A customer offers you, and they say that they'll buy 500 couches. Now you might think, okay, well, how do I go about determining whether I should sell for $1,000 a couch? Now we can talk about things like supply and demand. We can talk about what the market, what we think we can charge. We can talk about all those things. But at the end of the day, at a minimum, we should be able to get back our cost. We should not be selling that couch for less than what it cost us to produce it, unless we had a really compelling reason to do so, like market penetration or something like that. But typically, you want to, at a minimum, have this benchmark and say, okay, does this $1,000 a couch, does that match what it costs us to basically produce a couch? And it's not so easy to figure out how much it costs to produce a couch, because there's all kinds of costs that maybe can't be directly traced to this couch. Maybe there's marketing expenses, there's headquarters expenses, there's all kinds of things. We don't just think of the material cost of that couch, and we have some decisions to make in terms of what we'll actually include here, in terms of cost X, cost Y, cost Z, which ones are going to go in. But ultimately, we're gonna plan, and we're gonna come up with some kind of idea about the cost to produce those couches, and then we're gonna make a decision about whether it's a good idea to accept this customer's offer. We're going to use managerial accounting to help us make that decision. Now, managerial accounting is also very useful when we talk about directing and motivating. And again, this kind of gets into this idea of that we can allocate costs through this process called cost allocation. And this is where it's really going to get into the motivating. You might think, well, how do I motivate my employees, or how does cost allocation or managerial accounting, how does any of this have to do with motivating my employees to do their job? Well, let's think about this for a minute. Let's say that you allow your employees to take paper. Okay, they can take paper from work, and they can use it at home or whatever. You just take all the paper you want. Well, if you don't charge them for that paper and just say, okay, this is free, well, what are they going to do? They're going to take a lot more paper than they would if they were being charged for it. So now you can think about, okay, well, if I charge them for this paper, if I say, okay, now there's going to be a cost to it, they'll behave differently, because then they'll start saying, well, wait a minute, I don't want to just take all this paper because it's actually going to come out of my salary. And it's the same way with cost allocation, right? We can think about, for example, if you have multiple divisions, you have your firm. Sorry about that. You have your firm, and you have, let's say, you've got 3 different divisions, and you go ahead and you say, okay, well, we've got utility expense, we've got a light bill, we've got all these utilities, and we just get a bill at the organization level, right? I just get some bill, I'm the CEO, but these different divisions, they all contribute in some way toward that utility. Now, am I going to split up this utility cost among these different divisions here? Or am I just going to say, you know what, just ignore that. That's not your responsibility. Well, if I ignore it, if I don't allocate this cost, then those division managers and so forth, they're going to behave a lot differently because they're not being evaluated on that cost. So maybe they leave the lights on. Maybe they don't care about reducing the utility expenditures. But if I allocated these costs, now all of a sudden they have a reason to pay attention and try and make sure that these utility costs are as low as possible. So we're kind of motivating them and changing the way people behave based on what costs we allocate, and this is a subset of managerial accounting, is cost accounting. So we can also think about controlling costs. When we think about controlling, well, what do we mean? Do we just mean controlling spending? Well, to an extent we do. So what we're talking about here is we can look and do things called variance analysis. Now, variance analysis is a whole topic in and of itself, but in a nutshell, basically what we're doing with variance analysis is we're saying, okay, what was our planned spending? Okay, what was our planned cost here? What did we expect that we were going to spend on the raw materials or whatever? And then what was the actual cost? What did we actually spend? So think about it this way. You say, okay, well, I think I'm going to buy 100 units or spend $1,000 on raw materials to build these couches, right? So I'm going to spend $1,000. That's the budget. That's the plan that we talked about in step 1. But then we find out that actually, after the period is over, we look and we say, okay, well, we actually spent $1,200. So now what we have is we know that we overspent here by $200 more than what we actually set out at the beginning of the period. So now we can go about and think, okay, let's analyze this and let's think about are we doing a good job controlling our costs? Now maybe there's a legitimate reason for this $1,200, and after we've analyzed it, we go ahead and say, you know what, that makes sense and is fine. But this is it's basically giving us a way to kind of like highlight this and analyze and say, okay, here's something that we should be looking at. We've got this difference here, and it might be an area where we're doing a poor job controlling costs. So we're basically using managerial accounting and this variance analysis tool to help us control our costs. So lastly, we can think about managerial accounting in terms of performance evaluation. Now remember I said we can look at the firm potentially as different divisions, right? If you have different divisions at the firm and you have division A and you have division B and then you have division C, right? Maybe one makes couches, one makes love seats and so forth. However you split the firm up and you look at these different divisions and you say, okay, how do I evaluate the manager of division A versus the manager of division B and C? How can I go ahead and measure that? Because if we just look at like the income statement or something like that, that's for the entire firm. Okay, that's for the whole firm. And maybe, we're the CEO and maybe we don't, not that we don't care about what's going on at the firm level, but we want to dig deeper and say, let's go ahead and let's see if we can compare these managers to one another and see if they're doing a good job. And what metrics do we compare them on? Well, that's up to us, right? If they have some kind of responsibility for generating sales, and then they also have responsibility for some costs, we might come up with like kind of a divisional profit. We might say, what's the profit of division A, the profit of division B, and the profit of division C? But if they don't really have any responsibility for sales and all they're really doing is basically manufacturing something or whatever, and it's really just they're just kind of responsible for costs, then we might just look at costs. And we can come up with whatever kind of metrics we want because this is managerial accounting. It's just done for internal purposes to help us run this this furniture manufacturing company. And so we can create whatever metrics that we think are useful, and none of it has to follow GAAP.
Okay, so that's the definition of managerial accounting. And as we go into next week, we'll look at specific issues with managerial accounting, determining cost, determining the period and product cost of something, and then applying it to a per unit basis, which is chapter 18. So again, this week, I want you to concentrate on assignment number 4 in conjunction with also the case paper assignment. Work on those. On Friday in my update video, I will be posting the solutions and the grades for assignment 3, which is the completing the accounting cycle. And that'll be posted on Friday. In addition to Friday, I will have some more discussions of managerial accounting and the trend analysis and the chapter 13 financial statement analysis, which is also part of assignment 4 and your case paper. And that'll lead us into the review session on Saturday afternoon. And then we begin a full week next week in week 7 of definitely managerial accounting and cost per units and break-even points, leading into our final week in week 8 of finance, capital budgeting, investment, return analysis. So that's where we have headed into the next couple of weeks. You have a graded assignment this week. Due Sunday, assignment 4, and then you have the case paper due a week from Sunday. And then the subject of managerial accounting and finance will be a part of our final examination the last week of class. All right, everybody, have a great week. We'll talk to you again on Friday. Any questions or concerns? My student hours are Thursday evening. Please feel free to come on Zoom and ask me any questions or concerns you may have. Thanks. Have a great week. We'll see you soon.